What's going on, everybody? Good evening. Welcome in 1K. Good to have you. What's going on, Rev? Good to see you. Welcome in. Good evening. Always, sometimes. I don't believe I've seen you in one of my classes before. Maybe you've just been hiding. But either way, good to see you. Good to have you tonight. If you guys haven't already noticed, or if it's not obvious, I'm on my laptop tonight for the first time in a real long time. So I got another laptop that I'm gonna open up and put the chat on there so I can see it better because I'm on a tiny screen with just the presentation right now. So I'm trying to email myself the Zoom link to get it open somewhere else. Oh, Norvin, welcome in. Welcome in, buddy. If we're lucky, we'll be able to talk about some of your favorites tonight, but um, we'll have to just wait and see. All right, here we go. Let's get it, Vinny. Good to have you in here. We got cornbread in here now. Wow. Never welcome in. Welcome in, everybody. Gonna give it just a few more minutes. Just gonna give everybody the chance to get on in here. What's going on, Raina? Good to see you. All right. I got the lecture open. Let me just make sure I don't open audio on another screen because that's not going to go well for anybody involved here. All right, cool. I got the lecture and the chat opened. Running this one with two laptops tonight. This is a unique class. I'm traveling for work right now, so I'm actually in Texas in the hotel. Two laptops deep. I guess I should probably take a picture of the setup real quick. What's going on, iPhone? Only Shanks? Yeah, I've seen you around before. Glad to have you tonight. Welcome in. Should be a really fun class. Here, I'll show you 1K. I'll show you the setup. Dude, I don't miss a lecture, man. I don't miss a lecture. Unless I'm sick. The last lecture I missed, and the only lecture I've missed in the last couple years, honestly, was Norman, that's funny. Somebody asked what I do for work, and Norman said I'm in HR. No, that's not true, but I work as an engineer, and sometimes I got to travel out to site. I'm in Dallas actually right now. Dallas Fort Worth area. Maybe I committed a crime by just saying I'm in Dallas to some people. Sorry, I'm typing out a message and I can't typing out the message on the phone. All right, there we go. There's a picture of the setup. This is what I got going on right now. I'm a controls engineer, so I work a lot in the shortest way I can describe it is I make large equipment work together automatically. Um, yeah, it's been taking up a little bit more time uh, than I'd like recently, though, which has been a little bit disappointing. But anyway, I got to figure that out myself. Yeah, I think so, Giovanni. Absolutely. I'm doing well. It's good to see you, Rudy. Thanks for coming in. Thanks for coming in. We're going to get started. Just a couple more minutes, everybody. I don't know what time it is. Okay, 6:04. Well, technically 8:04, I guess, for me. I just don't change my time zone. Yeah, it's kind of weird to see my screen on the other monitor. That's a different experience. What's up, curry sauce? Welcome in. Welcome in. All right, just a couple more minutes. Good evening, Gail. Good evening. All right. I'm going to send one final message out, letting everybody know we're getting going. And we're going to get right into it, not keep anybody waiting any longer. So give me 1 second to figure out how to type this out. Promise I can get it done. Raphael, that's an interesting question. 3 to 6 month out trade, is that a swing or a leap? I think closer to three. You could call that a swing trade, but I don't know. I mean, in terms of the term you call it, I wouldn't say it matters too much, but the further you get away from like the 1 month type of trade duration, the closer you get to a leap. But there's not really a line in the sand, I'd say, between what's a swing trade and what's a leap. I guess it's kind of a range, I'd say. All right, a couple minutes after the hour. Let's not waste any more time and let's get right into it. Welcome everybody to the lecture for tonight. Tonight we're going to be discussing swing trading. For those of you who haven't been to one of my classes before, never heard my voice before, I'll just give a quick introduction to myself. I know those who have been here for a while probably are tired of this, but my name's Tostie. I've been giving lectures here for, I think, 3.5 years now. So a little bit of experience under my belt in terms of the teaching style and that sort of thing. So hopefully you feel like you're in good hands. That said, yeah, a lot to cover in this lecture tonight. It's my first time, and I think our first time as a Discord group, teaching a class in this specific manner. So might have too much information, might not have enough. We'll kind of see how it plays out. But as with any of my lectures, I highly encourage you all to just ask as many questions. Anytime you think of something, anytime something confuses you, feel free and don't hesitate to ask me. Or if I missed your question in the chat, go ahead, ask it again. Yeah, I'm going to do my best to keep things slow, but those of you who have been in my classes before know sometimes I pick up the pace a little too much and start talking really quick. So going to try and keep things a little bit more mellow today. Yeah, so with any lecture, generally I like to start with a little bit more of the basics and then kind of build up as we move on. In terms of the context that I'm expecting you all to understand for this lecture, we're going to be reviewing charts. We're going to be talking about some kind of specific technical setups. So I'm hoping that most of you in here have some kind of background. But if you don't, hopefully it'll at least be a good introduction and give you that motivation to go review some of our more beginner lectures. So that's enough of me rambling. Let's get right into the lecture. The first question that I want to cover, which is something Raphael already asked, is what is a swing trade? And honestly, like I mentioned, there's not really one good way to define this. So I decided to just ask Google and post the answer that Google AI provided, which is swing trading is a trading strategy that involves buying a stock or other asset and holding it for a short period of time to make a profit. Swing traders typically hold positions for a few days to several weeks, but trades can last up to several months. And honestly, Google AI really hit the nail right on the head. So shout out Google AI. This is a better description than I could have thought on my own. The one way that I'll rephrase this is, generally speaking, at minimum, when we say we're taking a swing trade, we're at least holding it through the market close into the next day. So when the market closes, we're holding some position open with the intent on holding it into the next day. And some of you may be wondering, well, why swing trading, right? Why is this, a trading strategy that I might want to take up, or at least a trading mindset, I guess I'll say. For me personally, the reason I prefer swing trading over day trading or scalping, which are kind of shorter term mindsets, are, generally speaking, I can think a lot slower when I'm swing trading. I don't need to make quick decisions when I'm taking swing trades. It can be a little bit slower paced. I'm taking trades based off of the higher time frames. Generally speaking, I can find a little bit more confluence. I have more time to think through exactly what I need to do. And also, I like seeing, I think, honestly, personally, it just suits the way I think about financial markets and my emotions much better than shorter term trading. And that's something that I've just learned through experience trading. Generally speaking, I day traded plenty of times in the past, still do. But for the most part, swing trading is really what agrees with me most. Also, some people might find benefits in taking up swing trading just based on a scheduling perspective. As a day trader or a scalper, obviously you need to spend a little bit more time glued to the screens and really kind of babysitting your trade a little bit more in depth. Whereas as a swing trader, you can really sit back, kind of set alerts and wait for things to play out, which is really my preference. So we're going to talk about swing trading in a whole bunch of detail tonight. We're really going to cover the aspects of a swing trade and essentially what I look for in a high quality swing trade. And as I mentioned in my message introducing this lecture, if you have no trading strategy or kind of no set of things or set of qualifications that you look for in a trade, if you pay attention tonight, you will 100% have that when you leave. So couldn't recommend this one anymore for those types of people. So let's keep this one going. Let's talk about the building blocks or the fundamentals to creating or understanding swing trading. I want to cover this graphic first because it's one that I've brought up in lecture here and there so many different times, and it's titled the cycle of price action. The reason that I like it so much is because it offers kind of a logical explanation behind where the market is trading or where any individual equity might be trading. And it's really, really simple. Effectively, what we have here is the 10 EMA, which stands for exponential moving average in red, and the 20 exponential moving average in blue. And essentially what these two moving averages represent is the trend in the short term. Generally speaking, when using those EMAs, they're a little bit more reactive to short-term movements in price and can give a bit better of an understanding of where price is headed in the short term. And you'll see there's a bunch of labels kind of on this cycle of price action, which you can use to kind of identify where a specific stock is trading at relative to this cycle. And I wanted to just introduce this at the beginning of the class, and we'll plan to talk about this in more detail a little bit later. But in general, right, the big idea that I wanted to get across here is that patterns in the market are very repetitive. There's almost never anything new in the market. There's not something that really you've never seen before for the most part, right, in terms of what's going on in the chart. Obviously, there's going to be new news, new stocks, etc. But for the most part, everything that we see in financial markets has happened in some way or another before. So as a result, it's easy for us to kind of make some kind of simplification such as this, where we can use these sorts of patterns to identify where a stock is currently trading at relative to its larger trend. So we're going to talk about this in more detail. Just kind of wanted to put this image in your mind. Maybe you decide to take a screenshot, save it for later. And hopefully as we continue on throughout this presentation. Cornbread says, is it just me or is the 10 EMA supposed to follow price closer than the 20 EMA? Yeah, that's absolutely correct. I think, honestly, it's just kind of as a result of the simplification of this drawing. Yeah, it's a fair point. Yeah, you are correct, essentially. This drawing at the end of the day is just a simplification, but generally speaking, when we're in an uptrend, we're going to be looking for that 10 EMA to be above the 20. And then when we're in a downtrend, we're going to be looking for that 10 EMA to be below the 20. So honestly, you could kind of flip the labels on this drawing and it's a bit more accurate, I'd say. So good catch, Cornbread. I've honestly looked at this drawing multiple times and never really thought too closely about that in specific. But I think honestly, yeah, I guess it's better to think about this drawing with the blue line as the 10 and the red as the 20. Because yeah, that 20 lags price a little bit more. Nice catch. All right. So kind of the building blocks of a swing trade are really two separate pieces. And the first one I want to introduce is a higher time frame trend. What that might look like could be reasonably simple. So I took just kind of quick screenshot from a stock that I've been following recently, just hiding the name for now. And I wanted to highlight a very obviously strong higher time frame trend. And just to kind of give a bit of a breakdown of what we see on the chart here, this little cloud represents the 10 and 20 EMAs. So like Cornbread mentioned, the 10 EMA is what's following price a bit more closely, and the 20 EMA is what's following price a little bit less closely. And what this indicator here notes is that when the 10 is above the 20, it gives this green cloud. And when the 10 is below the 20, it gives this red sort of cloud. So first thing for me when looking at a higher time frame is determining what these two EMAs are doing on the higher time frames. And there's a little bit more to it, but me just simplifying things a little bit here. This is kind of one of the fundamentals here is understanding what the higher time frame trend is based on these moving averages. Next is then taking a peek at the structure of price. So for example, here you can see we were forming this kind of big base below these highs. As the EMAs were trending positive, we got this nice strong breakout through these swing highs back that were set weeks and weeks and weeks ago, which as a result should kind of be something that you note down, be paying attention to as a result. And kind of one highlight of this really is that two things, right? Paying attention to not only the trend, but also the structure. And those two things could kind of be synonymous to each other. But just to kind of recap here, the trend, essentially kind of the most notable piece here is what the moving averages are doing. So 10 above the 20. and then taking a closer look at structure. And what I mean by when I say structure is how are we trading at relative to our key pivots or key levels. So for example, if we're looking back here, this would be kind of the most key pivot on this chart, kind of our 52-week highs in this area. Once we break that key pivot, there's absolutely no reason to be short anymore. And if there's no reason to be short, there's really only one thing to do, which is obviously go long, right? So when you see a break of a key pivot such as this, likely this was on high volume. This is the largest bull bar in this entire time frame, closing near its highs. So this is everything but a bearish signal. And as a result, you have to treat it as such. So these are kind of the two most important things to be looking for on these higher time frames is number one, trend, number two, structure. And structure really comes from paying attention to these key pivots. Next up, kind of key to having the high quality swing trade is also a lower time frame setup. So moving on to the lower time frame of the same chart, there's a couple things that I want to note here. First of all, we got a pullback to very strong support. And if you take a quick look between these charts, you could probably tell that it's the same stock. Well, maybe not. Maybe it's a little bit difficult. But this week right here is where we got this big gap up here. This big red week here is where we got this big gap down here. So you can kind of see the comparison between the daily and weekly. So first most important piece of this daily chart now is we got this pullback into strong support. And one piece that I want to note and kind of highlight here is one of the most kind of important pieces of my trading and kind of has been the most important piece for years at this point is the volume profile. And just to give a quick introduction into what the volume profile is, at the bottom here, you can see volume represented by time. So each one of these volume bars represents the number of shares traded during a given candlestick time frame. In this case, this is a daily. Whereas the volume by price or volume profile or market profile, whatever you want to call it or whatever other people call it, essentially represents volume by price. So it shows you the amount of shares traded at various prices. So similar idea as the volume by time, just presented in a bit of a different manner. So what I want to note here really is this pink line. This is the point of control or the most important kind of area in this given time frame. This is a 6-month time frame, and you can see this pink line here just happens to be exactly where price bottomed out, which there's absolutely no coincidence in that, no coincidence at all. So that's kind of an important piece is getting that pullback to a strong support. Reason that I like being able to purchase these pullbacks after a little bit of consolidation is because it really does offer a large amount of risk to reward, right? Because we're here effectively sitting on top of support. So your stop loss is reasonably close by and you have a lot of room to your targets above. We got a trend, or we got a question from Raphael here that I'm going to address. Try to time the bottom or catch the break. Is one less risky than the other in a swing trade that will move slower? Yeah, it's an interesting question. So you're essentially asking, is it kind of better to try and time the bottom or better to catch the breakout? Really, it's kind of two ways of thinking about the same ideas, right? On one hand, catching the bottom is not always so simple, especially when you're trying to catch, maybe a first bounce of support. Me personally, if I'm trying to catch some kind of bottom, I need to see some type of bottom actually begin to form, which here on this specific stock, we actually did begin to see. So you could see, we start to see price tightening in a range right around the support. And also we see elevated price or elevated volume as price remains in this range, also still setting a higher low on this time frame as well, and still just hovering right around the support. So for me, this is much less catching a bottom, and now it's really buying a higher low. If you're just trying to buy this first day we come into the support after earnings, yeah, I'd call that catching the bottom. In this kind of trade, it worked out, but me personally, I generally want to see some kind of signal that a bottom is in, rather than just buying directly at what might be a bottom. And I can dig into that a little bit more. Whereas when trading a breakout, you're really buying the premium, or you're paying an extra premium for that safety, right? So when you're trading a breakout, you know that price is moving in that direction, you know that buyers are supporting price, but you're going to have to pay more for an option contract, a share, whatever it might be, in order to have that extra kind of validation, which sometimes is worth it. And we'll actually talk about that specific example here. So again, really two pieces that I wanted to highlight here on this lower time frame, which is a pullback directly into strong support and elevated volume as price stays in range. And really, we've talked through kind of the kind of building blocks of at least what is my strategy, which is effectively summarized as volume price analysis. So really what we're doing is looking at the higher time frames, understanding what the trend is and how price is trading based on prior pivots. Then we dive into the lower time frames, take a look at how volume is correlating with the current price. Is price currently sitting at support? Are buyers stepping in at support? It's really all we're doing here. And it might sound a little bit complicated as I explain it, but truthfully, it's really not. And it's actually reasonably simple. So really quick, I know I've kind of flown through a lot already. I want to take a quick pause and just check for understanding. How is everybody feeling so far? Are there any kind of big red flags, questions, concerns? If so, go ahead, say those now. Nothing wrong with it. I guarantee they're going to come up, but yeah, better you ask those questions now rather than later. So what do you guys have? Any questions, concerns, anything confusing? I'll tell you what stock. I'm hiding it for now. For no specific reason, honestly. How do you find the point of control? Through the volume profile? Yeah, I'll just show you really quick. Essentially, finding the point of control. Well, here you go. Now you can see the stock. Finding the point of control is reasonably simple. All you really do is just pull up the volume profile, which me, I have a study already ready to go for it. And then you can see when pulling up the volume profile on the kind of 1 year, 1 day time frame, it's not as useful because most of the price action in this kind of past couple months has been in the area above 110, which this shows a lot of price action down to the 50s. So me personally, on this specific example, I just zoomed into the last 6 months here. And now you can see a bit better defined volume profile for the specific range that we're trading in, because it's not relevant for me to see that volume by price all the way down to 50 because we're trading, 200% above that. So yeah, it's still is what we're looking at in the PowerPoint. So double check, 10 EMA follows the trend more closely than the 20. Yeah, absolutely. So the 10 and 20 in the EMA, that's essentially the period of the moving average. So essentially, if we think about a simple moving average, a 10 period simple moving average is just taking the 10 most recent closes and dividing it by 10, and that's the average, right? So you could imagine 10 period being shorter than 20 period is going to be a bit more closer to the current price action because it's not taking in the prior 10 periods that are a little bit further away from the current price. Now, with exponential moving averages, it's even more reactive as they have a bit of a stronger weighting to the short-term price action. So they're weighted exponentially in terms of the date. And you can see this is just the 9 and 21, very closely related to the 10 and 20 EMAs. 9 EMAs in yellow here, 21s in orange. And you can see 9 EMA very closely following price, much more closely than the 21 because it's a bit more reactive and it's not caring about what's been going on for as many days. Couple more questions. These are great. Let's see. Can you find these EMAs on TradingView? Yep, they're on TradingView. 3 red bars in the volume profile. What do you mean the 3 red bars in the volume profile? Are you talking about down here? Because this one isn't the volume profile. This is just volume by price, and that would represent selling in this case. Yes, only. Yeah. We will talk a little bit more about the EMAs. Sounds good, Gio. Yeah, Kamlesh. So yeah, essentially this is the volume by time. And essentially whatever color the volume bar is represents either buying or selling. So red in this case would represent selling. Green in this case would represent buying. Now, there's some kind of caveats to that. Like, for example, we have this big red volume bar, but it was on a 20-30% gap higher, which in this case actually doesn't represent selling. This is actually just a whole bunch of buying on what happened to end up being a red day where the close was below the open, but the open was still far above the prior day's close, if that makes sense. So you have to kind of take the colors down here with a little bit of grain of salt sometimes and pay attention to the context a bit more. So I want to cover just kind of a summary of what we've talked about so far with a little bit of extra detail. So moving on to kind of what I'm calling the big idea is essentially a checklist for some of the things that I look for in a high quality trade. And I said uptrend here. Really, it could be any trend. It could be a downtrend or trend reversal, uptrend or trend reversal. But really, we want to identify the trend. So this, I guess, is for mainly a high quality setup for longs, which me personally, over the past year and a half, 2 years, I could probably count the number of times I've traded on short. I mean, the number of times I've traded short over the past couple of years is probably within 20 to 30 times. So anyway, the trend of the overall market is up. So I'm focused on trading higher. Anyway, here's kind of the 6 points that I'm looking for in a high quality swing trade. Number one is an uptrend or a trend reversal on the higher time frames. So here, covering this higher time frame setup, we have an uptrend, right? Easy enough. Next, an uptrend or trend reversal on the lower time frames confirmed by the EMAs, which in this case I mentioned 10 EMA above the 20 EMA. We didn't quite have that yet here. Just to show you the example for Dell that we're looking at, we take a look at the EMAs. Technically speaking, the EMAs were in a downtrend. However, we were setting up a trend reversal regardless. So we're kind of bottoming out, not setting any new lows, starting to reclaim a key pivot. So me personally, that's starting to look like a short-term trend reversal. Next, strong support is nearby, which I noted the weekly point of control, daily point of control, significant moving average, or a key price action level. In this case, we have the daily point of control and also a key price action level, right? This key pivot back from April. And also we could just take a quick look. I don't remember off the top of my head, but we also had the 50 simple moving average just hovering right around price here, which is also a key moving average. Next, ideally, volume gap is above. That's just kind of one that I like to see. Essentially, what I mean by a volume gap is a lack of resistance per the volume profile. So in the case of Dell, we had not only a volume gap above, but also a price gap. And what that means is essentially, like I said, a lack of resistance above, which obviously if we're getting long, we want as many reasons for sellers to not step in as possible, right? Pretty logical. Next, volume price analysis agrees with the uptrend. So generally speaking, we want high volume on those moves higher, low volume on moves lower. This one in specific, we didn't exactly have that. We had that kind of big move lower on earnings. However, just considering that this is a hot sector, right, Dell getting more involved with the AI space, as well as we were still seeing that elevated volume as we were beginning to base out, I think it still checks this box. And then finally, if trading a breakout, high volume buyers through key level on breakout, which obviously at this point, right, if you even waited till yesterday to trade this breakout, very clearly high volume buyers, right? Volume is only increasing as price moves higher, which this is absolutely not a bearish signal. We could look at another kind of stock in a similar sector, SMCI, very similar idea here, right? As we break this pivot here, high volume noted by this kind of yellow indicator that I have here. This yellow shows up every time there's elevated volume, which, I mean, you could even draw this trend down from the highs. Even here, right, still elevated volume as price continues to move higher. That is not a bearish indication, right? If price moves higher, essentially, I'll give a quick analogy, right? What we can think of is, you know, let's say, for example, the price of gas is going higher and more people are rushing to buy gas because they just want it even more. They think it's better when the price is higher, right? That's probably something that you'd pay attention to, right? That's not necessarily a normal behavior, and it's something for you to be mindful of. Well, why are people buying the price? Why are people buying more gas when the price goes higher? That doesn't really seem logical, and that's kind of what's happening here now. Obviously, not quite the same thing, but with these examples, when we see buyers step in heavily as price moves higher, they're essentially buying something that's more expensive at a higher rate, which generally means that something is changing fundamentally. If somebody wants to buy something as the price goes higher, that means actually it might be a better value. Yeah, toilet paper in the pandemic example. Yeah, there you go. Right, as price goes higher in toilet paper, people want to buy more, and you know maybe that had some external factors. But anyway, good point. We had a question from Twisted Chuck. At what point have we turned to a downtrend? Like in your example, you see lower lows and lower highs. Would you say it is just a short-term downtrend? Yeah, so the kind of the key that we talked about is a long-term uptrend, which in this example here, this is not a downtrend, right? It doesn't matter how you look at this chart, whether you're looking at the moving averages, whether you're looking at the structure of price, whether you're looking at longer-term simple moving averages, this is not a downtrend, right? There's absolutely no arguing that this is a full, complete, strong uptrend. Case in point, right? Now, moving to the lower time frames, I would agree that this is probably a short-term downtrend if we zoom into something like the hourly. But even on the daily, right? If I just go back to the daily here and back to Dell really quick. This is also still not a downtrend, right? Looking at the daily time frame, this is not a downtrend, right? We make this a bit cleaner and mark out our pivots, right? We have a swing high here, higher low, higher high, higher low, higher high. Oh, it's so annoying working on a trackpad. And another higher low, right? Forming, right? That's kind of part of the thesis, is expecting this to turn into a higher low. If, for example, we, maybe broke down below this low, right? We made a move, something a little bit more like this, right? At this point, obviously now we would easily say that we're in a kind of more significant downtrend. But everything here points to just a short-term pullback, especially considering the structure price is still fully up, right? There is no downtrend here. Good question, though. All right. So that's really the big idea in terms of the things that I look for. And when written out this way, it seems reasonably simple. Obviously, as we've kind of seen throughout this lecture, there's a little bit more to it than just this. However, this is really the big idea behind what I look for in a swing trade. And me personally, the reason that I look for these specific characteristics is, number one, it suits well with the way that I like to trade and is the way that I like to trade. And number two, it's all based in fact, rooted in volume and price. And those are really the only two things that matter in any given stock, is volume and price. You could pull up thousands of different indicators that are doing whatever they're doing, but at the end of the day, price and volume are the only two things that matter. And the way that I trade from a swing trading standpoint is strictly rooted in understanding what price is doing and how volume is either supporting price or working against price. That's it, right? So when I put it that way, hopefully it sounds reasonably simple to you all. And it's easy to kind of simplify these things out when I just talk about it. Obviously, there's more to it, right? There's the emotional side, there's the trade management side, there's the entries, exits, then there's actually being able to find these characteristics in a stock, which takes practice. However, understanding these core concepts, I think, is one of the most important thing that you could do as a trader, and especially a swing trader. This is a good question from Al Brooks, which Al Brooks should be able to answer this question himself. Just kidding. How do you identify high volume buyers through breakouts or bounces? So if I wanted to answer this question simply, I would tell you that I developed an indicator that does it for me. That's a simple answer, right? That's not necessarily the only way to do it, of course, but very simply put, all you really do is look for that volume increase. So for example, if I were to draw this kind of, here, let's zoom out a bit more. All right. So let's say I put this kind of level here, this swing highs here on Dell. Let me even zoom in a bit more. Sorry, working on the laptop, so I'm a little bit clunky. Come on now. All right, so high volume on a breakout looks a whole lot like this, right? Let's just take a look at this specific example right here. So on this specific day, price gapped up. Let's see, what does this gap up? I can't figure it out. Anyway, massive gap up on this day through a key level, right? We tested this level 1, 2, 3, almost 4 times. Then all of a sudden on a single day, we gap up on volume that is twice the average, right? And the way to look at that very simply is you draw a line around what the average was before, which you could see is right around 3.5 million shares traded per day, right? And really all I'm doing when I'm identifying the average volume is just kind of looking at it and saying, okay, volume is generally around the 2 million mark in this time frame, right? And you could even get an actual moving average on that if you wanted to be exact. Me personally, I don't really think that's super necessary, but you could. And then here, all of a sudden, this stands out, right? So this is kind of the second way of identifying high volume, is just visually, right? This big green volume bar essentially came out of nowhere, right? We have a bunch of these average volume bars, kind of red and green mixed together, buyers and sellers. Then all of a sudden we get twice the average volume on a random day in February, right? That's something to be paying attention to. And then the next 2 days after that, we have high volume again after the breakout, which again kind of something to just be paying attention to, right? It's a little bit suspicious. And then obviously into earnings, right? We can only say so much about the volume on earnings. It all kind of depends there. But even here, right? This high volume as we push into the highs, right? Something kind of notable there. Here again, right? Massive volume as we set brand new highs right here, right? Again, if we take a look, this ish was the average volume, right? Which now the average volume has gone up to about 6 million per day when previously it was about 2. So now the average volume is higher. But I mean, just looking at this, right? What stands out to you in this area? To me, it's this, come on, and this. Those are the only two things that stand out to me, right? That's it. And lo and behold, where did those two big volume days come in? Well, this big volume day came in right before we put in a swing high. This volume day came through as we were breaking above those same swing highs with a gap up, right? So that's kind of generally at least my ideas behind identifying high volume. Reasonably simple and one of the easier things to do, I'd say. It's just something that people don't always seem to care about. And volume is the one thing that institutions can't hide from. And you know when an institution is buying a stock in mass when volume is above average, right? That's the only way. You know somebody big with a lot of money and a lot of interest in a specific stock is buying when we see this sort of volume. And that's why it matters so much, especially as a swing trader, right? Because these types of volumes actually end up coming in more commonly on the higher time frames, right? Easier to spot. And most institutions are trading with a longer time horizon, so kind of trading with them in some sense. Hopefully that answers your question now, Brooks. Any other questions before we keep going? Everybody doing okay? Can you explain what is expected when we get to a gap? What exactly do you mean? Like when we gap up or gap down? Okay. Or let's see. I'll wait for it. I will cover entries, Brooks. That'll come soon. Yeah. So in terms of a gap, right, it should generally be expected to act just like any other support or resistance. So for example, this gap here, generally speaking, you should expect that to act as some kind of support. And in this case, it really didn't. This gap here generally should act as some kind of resistance, which you could see previously it did and actually should be a target for you on a swing trade. If we look at the lower time frames, maybe we'll see a bit more information. Okay. So this is interesting. You can see when we move down after hours after earnings, this gap actually did act as support in the overnight session. And obviously into today and yesterday, this gap down from earnings ended up acting as resistance and then turned into support today, actually this morning. So pretty interesting setup there. And same thing happened the day before, right? This gap up turned into support, a little bit higher than the gap up, but that's the big idea. So generally speaking, gaps are really just glorified support resistance. They're just important because of that, right? It's all it is just you could think of it like a pivot. The way that I usually like to mark out the gaps is I just mark out where they begin. So like I'll mark this out as a target usually, and I'd mark that out as a level of interest. Good question. All right, I wanted to highlight this trading execution checklist really quick because it's something that I posted in my tab, something that I highlighted a few days ago in lecture, and I wanted to just remind everybody the importance of this, right? As a swing trader, generally speaking, we're blessed to be able to be a little bit more patient and to give things room. But if you're in the wrong mental state or not prepared, you're not going to be able to do any of that effectively. So you really need to be asking yourself and answering yes to every single one of these questions before even trying to take a swing trade. Number one is obviously having a trade plan, right? You got to have a reason that you're in the trade. And then that leads into having a reasonable and complete trade plan with profit targets, stop loss, and entry, which is super important as a swing trader because without that trade plan, you really don't necessarily know when to stop out and when you're going to sell. And as a swing trader, me personally, I need to set alerts at these levels, right? I set alerts that come to my phone when we're nearing a target or when we're nearing a stop loss or when we're nearing an entry so that I can just act on it, right? I do all the planning for my trade on the weekends or at night, and then I come in, execute during market hours. Very simple. Next important question is the plan high quality, right? Are you forcing this trade just because you got the itch, or does it actually check all the boxes that we outlined here? Or all your own boxes, right? I just want to note this isn't the only way to swing trade, obviously. This is just my way, and I think a great place to start for most people. A couple other important questions: Are you ready to follow your trade plan, and are you in a stable mental state? So many people, have something bad happen in their life and keep trying to trade, which that's never a good idea. I've seen it too many times, even in myself. And some people just aren't even ready to follow their rules. Like, for example, they wake up in the morning and they just aren't prepared to be disciplined and think that they can just do whatever they want and treat the market like a casino. Well, you treat the market like a casino and you'll get treated like a gambler. Which is you'll lose all your money eventually. So anyway, important to note that. Just wanted to highlight this. As a swing trader, you got to be able to check all these boxes. Although it's a little bit slower paced, if you can't do this and can't make a high quality trade plan, number one, you shouldn't be swing trading, and number two, you probably should evaluate yourself and see if trading's right for you. Because if you can't be disciplined, trading's not going to work for you. All right, let's talk about forming entries and exits. Again, going to keep using the same setup as kind of a textbook for us because this was one that I loved going into the week. But I didn't trade it because, well, I guess my rule isn't listed here. But I learned something a couple years back that it's always a bad idea to trade when I'm away from home. And as a result, if I'm not at home, I don't trade. I just can't manage a position effectively. And actually, it was funny when I was at the same job site a year ago, I created this rule, right? I made a bad decision getting heavy into a specific stock, lost a lot of money, and was like, wow, that was a terrible idea. I never want to do that again. So I never did it again. So now when I'm away from home, I just don't trade. All right, let's talk about entries and exits and kind of how to form them. Again, using the same example, me personally, kind of the entry that I was watching, or I guess I started with stop loss. As a swing trader, there's a couple different ways to define a stop loss. But me personally, it's really easy to always just set it as previous day's low. It's simple, it's quick, and it's very logical, right? If we break the prior day's low, essentially, I guess break and hold low the prior day's low, essentially we're not really, the setup isn't working as fast as I thought it was, and as a result, I probably should wait to reposition. Generally speaking, when I take an entry, I usually should expect to see the trade go in my favor reasonably quickly. If I find myself waiting too long, like a couple days for a trade to start working, either my time horizon is a little bit longer than normal for me, or I'm not really in at the right time. Being in early is still wrong most of the time. So me personally, generally define that stop loss at the prior day's low. And remember, this is a daily time frame. And as a result, if your trade plan and trade idea is coming from the daily and weekly timeframes, you should not be stopping out based on a 5-minute close. You should not be stopping out based on an hourly close. You really shouldn't even be stopping out based on a 4-hour close, right? Your trade plan is based on what is going on in the higher timeframes. And as a result, you should treat it as such. Next up is the entry. Pretty easy to define an entry here. For me personally, just these kind of grouped highs all in the same area, pretty logical place to get long above, right? You got an inside day right at the same high, pivot here from a couple days prior, really just kind of tight setup there, easy to get long above. And then targets, pay attention to those pivots from the daily, right? Here, right into your bear gap. Here, when the bear gap fills. Even another logical target is right here on this pivot. This kind of lower high that we set following earnings, right? Very, very kind of simple but logical targets, right? All we're doing is just paying attention to those key pivots in the short term, which is where this bear gap opened up, where this bear gap would fill, and also this little pivot here, this lower high or short-term lower high here. That's really as simple as it needs to be or as complex as it needs to be. You don't need to necessarily do anything much crazier than this, right? And again, this goes back to the same theme of paying attention to pivots, right? Paying attention to key levels. And that's all this is, just finding a couple key levels around current price. There's your entry targets and stop loss. Very simple. And as a swing trader, what you could do is set alerts at these levels. So when price nears or approaches some of these levels, you can get notified on your phone to be able to do something about it. Norman has a question over volume. Why is it on huge rallies? Sometimes volume can be low, but TTM squeeze ripping. My short answer is I don't know. My longer answer is that I would assume that TTM squeeze doesn't factor in volume. And as a result, volume could be doing whatever it wants, and TTM squeeze could be doing whatever it wants. They're independent of each other. That'd be my guess. I don't remember the calculation of TTM squeeze or even really know it, but that'd be my guess. So that's kind of the short introduction there to entries and exits. I know we had a couple questions come up earlier on that. Does that kind of answer everybody's questions there? And even to just go up to the real example and see how we've reacted to these same levels. 145, pretty damn close to the high of yesterday. Let's see. Obviously gapped far above that entry, but that's okay. Can sometimes use that first profit target as another entry, which me personally, the way I drew it was actually that line from the bull gap that we created instead of just this pivot right here. Yes, Zande. Let's say we break out. Do you wait for a retest or just get in during the breakout? Me personally, I generally like to wait for a retest, especially as a swing trader. You really want to get as much of a favorable premium as possible. And if you buy, let's say during the breakout, it's much easier to find yourself in a position where you're in the trade and you wish you were out. There's kind of two ways of thinking about that, right? You could be in a trade and wish you were out, or you could be out of a trade and wish you were in. And me personally, I'd much rather be out of the trade wishing I was in than in the trade wishing I was out, because I make much better decisions when I'm in or out wishing I was in rather than in wishing I was out. Hopefully that made sense. So patience is key as a swing trader, right? You're waiting for that setup to develop on strong support or at a key pivot. You're waiting for price to kind of shape up and consolidate in a way that makes sense for you to take entry. We're not in a rush. We're not worried about missing anything because these setups happen literally every single day. And there's not anything unique about any of this, right? It's really not like I'm reinventing the wheel here. There's nothing special going on. And as a result, it happens all the time. So you should never have a worry or fear that you're going to miss out, because truthfully, it's just going to happen again on a different name, which is why, I couldn't really care too much more that I missed Dell this time, because
happened.
I don't know what just happened there. I think my headphone got taken away. But anyway, the big idea behind what I was saying is that even if you miss the entry on this specific trade, you can just wait for the next setup, right? And this kind of connects it back to the cycle of price action, which I guess this is probably a good segue now to just go back to that really quick. If we pull back up our cycle to price action graph, we're kind of in this area, right, where we got this reversal extension. And this right now is what I would consider to be the wedge pop phase, right? So we've got the reversal extension where we're below the downward trending moving averages. We got the wedge pop through the downward trending moving averages. And now it's on us to wait for this kind of first stage where we consolidate back into the EMAs. And again, this is something that we see all the time, right? Literally all the time. In Dell specifically, it's been a pretty strong one, but here you can see the exact same thing, right? Reversal extension as the EMAs turn negative. We get this pop through those downward trending EMAs, consolidation right back into the EMAs, right? A wick right off both of them. Boom, right? Move higher. Then we get another move back into the EMAs, which would be your base and break, right? Where we consolidate, sit around the moving averages for a bit, consolidate, and then pop higher. And then same thing, right? Another base forming here. So these sorts of setups are not unique at all. And you can see this kind of same cycle of price action repeated right here. I mean, multiple times right here. Same idea, right? Reversal extension, break back through the EMAs. This time we didn't really get across back until all the way up here. But anyway. So me personally, while we may have missed the initial move, we still have the potential to catch a very favorable trade from a risk to reward standpoint if we get that move back down to the moving averages. Now, I'm not saying that's going to happen tomorrow or the next day, but it's just something to be watching for, right? Obviously, now this isn't really the place to be chasing this one higher if you missed it, but I'd be very intent on getting long the second we retest those positively trending moving averages, because there's a damn good chance that thing's going to act as support and keep moving higher. It's just how it usually works. Yes, Rodrigo, I plan to. Yeah, I only really post things in my tab when I plan to personally execute on them. I'm not going to just post things in there if I wouldn't take the trade myself. And since I'm away, I'm not taking the trade myself. So hopefully next week I'll be a little bit more active in there. All right, where were we? So yeah, that's really the big idea behind the entries and exit segments. Again, just to kind of summarize what we talked about, when entering, you could either take a break above the significant pivot, like we just talked about, or a hold of significant support. So another way to think about this Dell trade is, for example, if we bring back up the volume profile and then switch back to our 6-month time frame, that's 3. Switch back here. Another way to think about this trade would be as we kind of break back above this point of control and begin to hold it, you could absolutely get long even on this day, right? As we hold that point of control with a little bit of what you might consider a hammer candle, bear or bull bar closing near the highs, right? Another reasonable place to get long. Let's see. And then targets, again, as we talked about, key pivots above, right? So it could be gap fills or strong rejections from the higher time frame, which in this case, gap fill, right? That first bear gap, easy target. Bull gap, the low from here, easy target. Another easy target up here, and really not much resistance as price moves higher. So this one's a nice one with a lot of room. Oh, yes, Rodrigo. Yes. And then stop loss for me, always going to be an invalidation of the setup, which, as we talked about, just a lower low, right? Close below the prior day's low, easy stop out. Can also even make it tighter and take a stop below your entry. So if price closes back below your entry, once you enter, you could take a stop there as well. All right, we've covered a lot, and we still have a little bit more to go. So going to try and finish this all in an hour, but we're getting close. So talking through now how to manage a swing trade. Generally speaking, as a swing trader, right, the best position to be in is when you're in the green and you're kind of just waiting for your targets to hit, which if we took this plan on Dell, that's exactly kind of where we would be at. So generally speaking, right, there's only ever a couple reasons to exit a trade. And also, we need to be mindful of the reasons to stay in a trade. So reason to stay in is our thesis is still valid. Volume continues to support price, or we get the breakout that we were looking for. In this example, we've gotten all that, right? We got the breakout, we've got volume supporting price, right? If we look back here, volume is supporting price as price moves higher. So there's not really any reason that I'm seeing to be fully out of this trade. However, if we look at reasons to exit a trade, right, it could be thesis invalidated, targets reached, or maybe a volume price anomaly. So thesis invalidated, that's really just us hitting the stop loss, kind of a fancy way to say that. Targets reached, right? As a swing trader, every time price moves in to a target, you should be selling some shares, right? So it's or selling some of your position. And it's kind of the same thing that we did on shop here. Let's see. Yeah. Same idea that we did on shop. And this chart actually looks very similar to what we had on Dell, where we got this move lower, price beginning to consolidate around a key level. I mean, literally very, very similar. It's actually kind of scary, right? Oh, this used to be the daily point of control down here. Wow, I'll just talk through this just to show you guys that I'm not just cherry picking a setup that I'm reacting to later, but same exact idea on shop, where we have the higher time frame uptrend right here. I mean, we kind of got to ignore what happened in late 2022, but higher time frame uptrend, right? Pull back into key support, right? Daily point of control. So we entered shares at, I think, right around 58, 58.3, I think is my exact entry. And we have our targets, right? 64 is that gap high. 68 is kind of that first higher low or lower high, I guess, from this area here. 70, nice round number, and 75.30, which it's actually shocking how similarly this trade is set up to Dell. It's the exact same idea, right? We have the higher time frame uptrend, a pullback into key support, price beginning to firm up around these lows, right? We start to see buyers present here, and ultimately nice move higher. I forgot how similar these two trades were, and hopefully it clues you in that this is there's a reason that these two trades look the same, right? It's because this is what I look for in a high quality swing trade. Shop, for example, for me, I didn't actually take options. I took shares instead, just because I thought it might take a bit more time, but obviously a little bit wrong there. But anyway, same idea there. So, yeah, kind of the last reason to exit a trade that I didn't really talk about would be a volume price anomaly. So, for example, let's say we hit this first target here, 63.88, and we got a bar looking like this. Let me just make it look worse than it is. Let's just do 6.2 and 6.2. So let's say, for example, let me just make all this go away. Sorry, I'm making a fake example for us here. Almost done. Okay, there we go. So, for example, let's say if we came into our target here on shop, and all of a sudden we get this big bear bar closing near its lows with massive volume, right? At this point, it would probably be very reasonable for us to sell the rest of our position, right? Hopefully, we trim some at our target 64, but after a daily close like this is pretty nasty, right? Massive volume coming in at the lows. I mean, if we just look at AutoZoom, what that would look like, again, this is a fake example, but this would be the highest sell volume ever on this specific name. We get a bear bar closing near its lows. This would be a great reason to sell the rest of the position at this point. Now, obviously, that's not what happened, but if it did, right, that'd be kind of a volume price anomaly, or I guess in this case, not really an anomaly, more of a confirmation to the downside. All right. So we kind of already did the setup breakdown with that shop idea. So that's really the same idea, though, right? I mean, just to kind of bring this idea home and really kind of talk through all of it. Most important piece, we have that higher time frame uptrend, right? Moving averages positive on the higher time frames. In this case, short-term pullback into a key level of support, but structure is still positive with higher highs and higher lows. Zooming into the daily, same idea, right? Where we have those EMAs actually been a little bit longer, in a downtrend for a bit longer, which great reason to reduce risk by not trading the options, but the shares instead. Price basing out around a key level. We take entry once price is kind of holding that key level on some rising volume, and then set our targets as key pivots, stop loss below the lows. For me personally, I would have stopped out on a daily close below this 56 area, or I guess actually that was after this. Sorry, my actual stop was the daily close below the 57 area, which we never actually got. We got close a couple days. We moved below it here, but never got a daily close below, so no reason to stop out. And then targets simply are just your pivots above. So 60, 64, 68, 70 round number, and then 75 being the gap fill. And me personally, still in this trade, again, trim some here at our target 68, but no reason to fully sell, right? This is a share position. It's going to take time to work. It's not going to go straight up. And right now, this is just a test of the moving averages, which nothing really to be concerned about. All right. So to summarize everything we covered tonight, today we learned what a swing trade is, the fundamentals of a quality swing trade, how to execute on a swing trade, and how to manage a swing trade. Those of you may know, I have a bunch of other courses that kind of cover a lot of what we talked about today in more depth. So if you're looking to learn a little bit more about some of the specific things that we discussed today, such as price action and volume, trends, price targets, price action, etc., definitely recommend you go take a look at those. But with that really brings me to the end of the class for the evening. I want to stick around and address any comments or questions that you guys have. And before too many of you go, I want to just take your feedback, as this was the first time I really did this lecture, and I literally made the PowerPoint today, so nobody's seen it at all. What were you guys' thoughts? Did you enjoy? Do you feel like you learned something? Was it too much for one class? Yeah, what do you guys think? How do you feel about this one? And I'm happy if you guys wanted to, happy to hear you guys liked it. But if you have any way that we can improve it for next time, maybe we split it up a little bit, please let me know. Happy to split this up into maybe two. Yeah, happy to hear you guys enjoyed it. Again, really want to thank you guys all for being here. The lecture isn't over yet. I'm going to stick around and answer any questions, but just want to let you guys all know, definitely appreciate you all being here. These lectures are absolutely nothing without you. It would be no fun if I was just in here by myself, talking to myself. So just want to extend truly my heartfelt thanks to you guys all for being here, your participation. I mean, like I said, we're really nothing without you all here. So want to make sure you guys really enjoy. So I understand that we covered a lot in this lecture. If you have any questions or want to just talk through things with me, I highly encourage you to send over DMs. I obviously away right now for work, so I'm not really good about responding to DMs, but send over messages. I'm happy to review charts or discuss these ideas with you in more detail. But again, really happy to hear you guys all enjoyed. Charles says, would a test of the EMAs be another good entry on shop? Yeah, absolutely. Right. This would be our EMA crossback. Right. I think this is exactly the point. And, maybe this entry doesn't hold. We break below the EMAs. At this point, I'll sell the rest of the position. Right. If we probably a daily close below 63, I'll close the rest of my position. But as long as we hold up here, I don't really have a reason to sell. Right. This is still kind of developing as an uptrend. So I have no complaints about this specific trade. Yeah, Amazon, Norvin. That's one I'm tracking. I really do like Amazon. I think I really want to give it a bit more time. I think it needs a bit more time. I want to see it come back up to this trend right here. Want to see it come back here, which ideally it comes to this trend and 180 at the same time. But this one, I think it's only a matter of time before it's heading higher. I don't see a reason this doesn't hit 200 in the next couple of months. Honestly, I really don't. I mean, you look at this weekly chart, and this just looks like a massive kind of cup and handle starting to form. I mean, that I actually hate calling this cup and handle. I take that back. But I mean, this is just starting to consolidate at these all-time highs. I like it long, Norman. This is one of my favorites. Do I have a trailing stop loss? Generally speaking, I don't use stop loss orders. Like I don't put my stop loss on the books. I just set alerts and monitor price because I usually am stopping out based on the close of candles, and a floating stop would take me out in the middle of a candle, which isn't what I want. What's the cloud indicator called? It's posted in my tab, Norvin, and pinned. I mean, it's from, I guess, this person, Ripster. I don't know where I found it, but Ripster, I guess, EMA cloud is what it's called, maybe. But it's just the EMA cloud. I think it does more than EMAs too, if I remember correctly. Yeah, so it can do standard moving averages as well and other types. I'll take a look at Google for you, Norman. Yeah, Google looks interesting too. Google does look interesting, similar to Amazon. Let's look at your other one, HPE. Oh man, this looks crazy. A little too extended for me, honestly, but it looks good. VST. Yeah, looks like we looked at VST, gave you that flag break, and that seemed to kind of break back down. Looks okay though. A little double bottom right around here, potentially. Yeah, I'd be trading that double bottom, honestly. You could trade, honestly, the break above today's high, 87, 88 area. VRT, yeah, this is money. Same setup, double bottom, money. This is going to go, this is going back to 110, Norvin, 100%. GEVU, that's a new one. Oh, this is an IPO? Oh, I don't know, bro. I guess you could trade that break over 180, but this is an interesting one. GLW from Empanada. What the hell is this? Yeah, GLW looks crazy. Still a little extended on the weekly though, but I mean, yeah, obviously a ripper today. I mean, I guess you get long at over 40, but that's a nuts one. Nuclear power stock for data centers. Wow. ARM. Yeah, I that one finally cracked the highs. Finally came back. I stopped looking at ARM honestly after it did this, which this was literally after I saw it did this. I was like, okay, this is nothing for me to be interested in. I was watching the long it right around here for the longest time ever, and then never hit it, and then of course came all the way back. So yeah, I missed ARM honestly, but it's a bit of a chase for me here at this point, honestly. I mean, it looks good. It probably goes higher, but yeah, bit of a chase for me at this point. I was wanted it around this area. It never really gave a good signal, so kind of stayed away and then did that, and I gave up on it. And I mean, you could even see I literally have my whole trade plan ready to go. This was what I was looking at to long above, and here's all my targets, which obviously that never came to fruition. Yeah, a lot of interesting looking setups into the end of the week for sure. Unfortunately, you won't be able to do any participation on my end, but hopefully we'll be back to it by next week. I mean, I guess I am technically participating. I'm just sitting in shop, which there's nothing really exciting going on there. PLD, dude, what is this? REIT? I don't know about this one, Morbin. I'd say this one looks the worst, just in a weekly range. I mean, honestly, you're better off just waiting for this $100 level to come back into play. It kind of looks like it wants to. Yeah, this isn't really something I'd be as interested in, honestly, Norman. This one kind of sucks. Just in a weekly range. Cool. All right, everybody. Well, I want to thank you again for your time and your attendance. Definitely has been a pleasure. And okay, Vinny said one. I gotta give Vinny credit here. Yeah, I was looking at AMD a little bit. Yeah, it's just so weak. It's just lagging the rest of the semis so badly. That's the only problem I have with it is it's just not really a strong name. And yeah, even if you take a look at these trends here, technically breaking down here. So it'll be interesting to see how it closes the week out, but I just don't love it. It's just kind of stuck right now. If this ends up being a fake out, like if it gets back above 158, I think I'd like it a lot more. I'll say that. But for now, I don't know, Vinny. I mean, what do you see? What are you looking for? Me personally, yeah. I mean, this is breaking trend, and it looks like it just set a fresh lower high, which kind of scary. SQ. All right, we're here. Why not? Let's look at some charts. SQ. Yeah, see, this one just in a weekly range. I wouldn't touch this personally. Just still in a base. These types of names, I wait for them to break their weekly range. So, for example, something like Shop sat in a weekly range down here, broke out, then it gets exciting. But in the weekly base, it's just there's not much to do. Obviously, there's always short term opportunities, but for me, it's got to get out of that base. Um, PayPal, I think, is the same story. Yeah, I mean, there's just nothing to look at here. It's just sitting in a weekly range. There's nothing to do. ENTG. What is this, dude? This actually looks interesting. Little breakout this week. Yeah, this kind of looks like a ripper, Norvin. This is probably one you long above 140, but this thing doesn't seem like it has much volume. Yeah, this looks pretty good. ANF. Oh, come on, Empanada. This thing's just been outperforming Nvidia on the year. From 14, dude, it hit $14. Wow. Up 1,300%. That is so crazy. Yeah, I don't really know what it is about this stock. Like, I don't really understand why it's ripping. I mean, they make clothes, right? But their earnings isn't anything really to write home about. It must be something that they're doing. But I mean, I guess they're beating estimates. This must have been holidays. That's why the guidance was so much higher. Yeah, I mean, I don't know. Positive earnings, I guess. I don't know what's up with ANF, honestly. It's more impressive than everything. Booking Holdings. What is this? Is this booking.com? Wow. Why is this thing on a tear, dude? I mean, looks good above, honestly, at this point, you might as well just watch it at 4K, but looks good above the prior swing high here. What about like, uh, yeah, hotels seem to be doing kind of well. Marriott's on a rip. Huh. Yeah. Interesting, interesting tickers that you guys have found. Cool. All right. Well, thanks everybody again for your time. Always much appreciated. And I will see you guys all in the next lecture. You guys have a great night. Thanks again. Oops. Can't end it. See you, everybody.